Hi everyone, welcome to this week's market analysis. We are now looking at the US market. This is by US S&P 500 ETF, and we are looking at the monthly chart. So this week it looks very bad, and what I did was that I pulled out all the past 10 years of price data and trying to mark the month of May on this chart. Just trying to see whether how bad it is this year. But to my findings, from the April close to May close, this year is the second worst year. The worst year comes in 2010, which is the very first time that we understand about or realize the Europe debt crisis to be that big, which is coming from the Greece, Spain, Italy, and Portugal and Ireland. This year, there's nothing new. We are still focusing on the Euro debt crisis, and in May, 2010 is also in May, and with this time we have put in a lot of focus on the Greece, and then comes in Spain and Italy's bank crisis problem. So it has made this market very, very bad. And but I am not a seasonal pattern trader or cycle trader. What I'm looking for is just for fun to know that this May bar here is not the worst May in the past 10 years. So but it is from the price action and volume, it looks really bad, because in May we have took out 3 bars of net progress to the upside in 3 months of progress to the upside. So this is a very significant down bar here, and we are also doing it with increase in volume. So market seems to be wanting to work itself towards the lower price level. So the next level I will look at is the midpoint between this high to this high. This is the up move. I'm looking at the midpoint. Because Wyckoff says that market has this right to correct halfway, so that is the point that I'm looking at, and it also happens to coincide with the low of this bar here. So I would think that there might be some demand or some testing going on at this level here, which is the 124.26 level. And on basically on the whole structure, we are still seeing weakness, and now it is the effect of the cause of that weakness. So I might be thinking that there will probably be further downside to come in probably 1 or 2 months time. Okay, so that is on the monthly chart. And on the weekly chart, the story is the same. We still see weakness. We have not seen strength in this chart yet. And this week we have a very weak bar closing on the low with well, volume is not increasing, but because there is only 4 trading days in this week, so if we add one more average volume here, it's probably be slightly higher than this previous week. And based on the structure, we are still seeing weakness, and I have put in this reverse use of trend line to see whether how a price will probably behave or act along this reverse use of trend line. The 124.26 level is still here, and if we extend this, we might see a confluence here. That might probably be another 2 more weeks to come to this confluence level, and there will probably be a support there. That's I will probably watch very carefully at this level. However, there might be also a possible rally towards the high, but I will expect 132.18 to be the stopping point for any rally to come. And I'll probably be looking for shorts here if the rally is weak. So let's look at the daily chart. And on the daily chart, this is the levels, and so we actually have already rallied through it, but we failed to hold above it, and then we start to come back down. This is this week's price action, and this is the 124.26 level, and also we are not seeing any sign of strength that's coming in here, because along this rally here is really weak, and we are not able to move any or make any net progress to the upside, significant net progress to the upside, even though volume is coming in. So there is a lot of selling going on here. And this week we're also seeing these 3 down bars here with increase in volume. Selling is definitely has intensified over the past 3 days. So that indicates more downside for the S&P 500 ETFs to come. Technically, in this trend channel, I have adjusted the initial trend channel from this high to this high here, just pivot it over to this high, and then extend the parallel line all the way down to this low here. So there is some confluence. If we look at the 124 or 26 level, there's some confluence here, probably maybe next week or maybe late next week or early week after next, that we might see S&P 500 coming back to this level for a test, and then maybe there will be a rally, and then we have to see what kind of rally is that. And but of course I would expect a rally to come back into this 129.55 level, because this is the breakdown on the Friday, and on the Friday we break down with speed and volume. So this level is very likely for our market to come back to test this level, and if the rally is weak or the test is weak, we will probably get a very good short position at this level here. Else this level here will represent a very strong resistance to any up move, because we've seen a cluster of closures here, we've seen an attempt but fail on the next day, and then you see the market response to the downside. So this 132.18 level is going to be a very critical level to watch. So that is my take for S&P 500 this week. Let's go to the Jakarta Composite Index next. This is Indonesian market, and we are looking at the Jakarta Composite Index monthly chart. And this month we are seeing a very weak bar closing on the low. It took out 4 months of progress to the upside since the beginning of 2012. This is a very significant down bar that we have here. On the overall structure, it is still in an uptrend, and we have not we only make a lower low here, but we did make a higher high here. So it is probably likely that we will see Jakarta Composite Index going to range within this very big range here. If we're going to see major supports going to break down, and I would expect Jakarta Composite Index probably to come back into this level for a test, and demand is going to come in at this level. Else, if we do see some pullback just before this level, and then Jakarta Composite Index starts to turn back up, probably more than halfway of the down move, then I would expect Jakarta Composite Index to go sideways in this monthly chart. Basically, on the start of this up move here, this is a span of 2.5 years, and we have not seen very serious correction only until last year, August. And so I would expect some sort of a correction here, or a consolidation here, to probably consolidate some of the gains, wipe out some of the weak holders from the market, so to probably form another new leg up. However, this shortening of a thrust here is probably serious enough to cause probably Jakarta Composite Index to come back lower to these levels on the monthly chart. So I will pay attention to the levels here at 35.90 and 32.70, 33 to 33.09 level here. So let's go to the weekly chart. On the weekly chart, we are also seeing that this 4 weeks of down move, continuous down move, have already wiped out 4 months of up move since the beginning of the year. And we are now making a new low for this year, and on this week. So it suggests that market will want to make another leg down, or more downside movement to come. However, I would expect some form of rally to come, because of 4 continuous down weeks. We probably would see some form of rally of coming back into the levels here, probably the 38.96 level for a test, before it tries to move lower towards the 36.24 first. I will expect some demand coming in at this level, because we have seen the demand coming in at this level here in the past, and there's also a technical confluence between this demand line and this support line. So I would expect some demand to come in for rally for the Jakarta Composite Index. But however, on the monthly chart, we probably might be seeing some more downside, so be careful in to assess what kind of rally is it, and how the rally is being conducted. On the daily chart, we have broke down the axis line of the 38.50 level, and in actual fact we saw a bounce on the Monday bar, then it wasn't able to hold itself or rally away from the 3900 and then starts to come back down. And on the Thursday we have a very huge gap down and then try to break the 3850 axis line with volume. So I would expect more downside to come, but however I would also expect a rally back to the 3850 for a test, and then probably going to start to turn back to look for the lower price objective. The level that I'm looking at is 3760 and 3624, these two levels, and I'm just expecting it to look for some confluence or some demand that's coming in at this level for Jakarta Composite Index to rally. However, if it rallies through from this point here all the way up, I think 3896 is going to be a very strong resistance, and I would think it might just hesitate or meet resistance here and turns back down again. So that's my take for Jakarta Composite Index in this coming week, and we will go to the Hong Kong market next. This is Hong Kong market, and we are looking at the Hang Seng Index on a monthly chart. And this is the May bar, which looks very bad, and it has convincingly closed below the demand line, which is not a very good sign for Hang Seng Index. It just suggests that the lower levels of like 1600 is going to be tested, and because this is the monthly chart and it is more significant, and we are not seeing much of a swing lows in this range from the low here to all the way to 1600, so a likelihood that Hang Seng might just come back to test this level. Of course, the monthly lows of these three bars will probably have to observe. This is a 17821, and this is the 17613, which I've marked on the weekly chart. On the overall, the structure is pretty weak, and we are just seeing that Hang Seng has no ability to rally away from the midpoint, which the midpoint coincide with this low of this bar here, and we are closing below it. So there is more downside to come for Hang Seng Index, and it is in a very weak position according to the monthly chart. So on the weekly chart, it's a little bit messy here, because what we are seeing is that there is a good rally coming up here, but however the rally wasn't able to keep itself, and we have slight shorting of thrust here, and then now we do some kind of a up thrust or hidden up thrust at the weekly chart, and we see the effect of that pulling Hang Seng all the way down towards the 18300 level. But however, for 2 weeks we are not making any net progress to the downside, even though volume has increased, but the close is lower, so the sellers are still saying that they are still in control of the market, and buyers are just no ability to rally or make a new high from here. As you can see that we are making all lower highs in these 4 bars here. So we would think that Hang Seng Index will probably going to visit the lower price objective into this region here, the zone here, the 17613 and 17821, which is the 2 monthly lows that we observe in on the monthly chart. So this level here, I would expect some demand to come in at this level, probably to rally Hang Seng back towards the 18300 level or above. But if the rally is weak, we probably can find some shorting opportunity here. Overall, the market is really weak, and if we do see some support that come in earlier than the 17600, 17800 level and rally Hang Seng back up, this whole structure is going to be a very messy structure, and I am thinking that Hang Seng is probably going to trend sideways for probably a very long time to come, and probably what we will expect is that it might just trend or sideways in the range between the 1900 to 21,000, probably in this big range here. So we will just have to look and see how that will happen or not. On the daily chart, there's really nothing much, because I was expecting some rally to come, and it did give me on the Monday and Tuesday, but on the Wednesday, start of Wednesday, we see the sell-off coming in and bring Hang Seng really back down below the week's low, and we are closing below the previous week. So it is a very weak market now, and on the Thursday we saw very huge volume coming in on this bar here, but the effort that is put in to rally the market back from the low wasn't be rewarded because we are not able to close above the close of the previous day, and we just stop short. With this kind of volume, I would think that if they are buying, they should be able, buyers should be able to move much further up, but you just stop short. So that just telling us that there is a supreme force of selling that is coming into the market on Thursday, and on the Friday we saw that follow through to the downside. So with the US market closing very badly on Friday, I think Monday morning we will probably see a gap down below the 18,300 level, but I would think that if we are going to go lower to the 17,800 level, we will be finding some demand coming in for Hang Seng market to probably rally back up towards the 18,300 level, or probably try to test the gap if there is a gap down on Monday. So that is my take for Hang Seng market, which is a very simple one because Hang Seng is still very weak. It is extremely weak, although there's a oversold position that I thought it will happen, and we might see a rally back up into this range here, but the inability to rally back into the midway of this short down move here has really tell us that this market is very weak. So any long position have to be very careful. Probably we shouldn't be thinking more long, we should be more thinking more short than long, and we're probably going to be very careful with this market. And because on the weekly chart, I think that the structure is just very messy, and this market is really getting very messy. So that's my take for Hang Seng market, and next we go to the Singapore market. This is Singapore market, and we are looking at the STI monthly chart. For the month of May, this bar here looks very weak, and we are closing on the low with increase in volume. So that suggests that the market wants to try to go lower, and the levels that I'm looking at is probably 2706 and 2521. On the overall structure, we have a lower high, lower low, lower high, so it's a downtrend, so we should be thinking it probably to go down. The path of least resistance is down. However, if we compare this down move with this up move here, so this is more a gentle down move, so we probably would see some slight moving down, probably gradual moving down, but if there's any demand that's coming to the market and turn STI above, probably reaching the 2900 level, we're probably going to see this market going sideways for probably some time to come. So this is on the monthly chart. So on the weekly chart, there's nothing much to say about except for these 2 weeks. Last week I was indicating that probably there is some exhaustion in supply, and this week we are seeing a further decrease in volume, and but price is able to move slightly more. So these two bars here is telling me that instead of supply exhaustion, there might be a lack of demand that's in the market. As we can see that price really rallies back up and comes back down, rallies back up and comes back down with just low volume. So that is really lack of demand that is in the market at the moment to support the market from moving down. I would expect STI to come back into the 2720 level, or even breaking this level to go towards the 2606 level for a test. However, 2521 is the critical level as on the monthly chart. This is the low point. Once it breaks this swing low, we are going to see the whole market swing down, probably lower to a much lower level. But I would expect if there is a turning around before it reaches 2606, and then we rallies back up, hopefully to go back above the 2800 level, then there is an indication that STI is probably going to go sideways and in a huge trading range, and probably that's going to be very volatile trading in the coming weeks. That is more for the weekly chart that I can read now. On the daily chart, there's no strength here to talk about, because what we are seeing is that after the big sell-off here with a huge increase in supply, and then the subsequent supply wave, it's having lower volume, so that also suggests that the supply is actually slowing down, but the demand is not coming into the market. So that is confirming, the daily picture confirms the weekly picture, that there's a lack of demand rather than there's a slowdown. I mean, there's a lack of selling going on, so that sellers just couldn't find anybody and just trying to sell whatever they can, and they just see the price starts to move down quite easily this week, to coming to the 27-36 level, and probably slightly stopping them. But I would expect this week that STI is probably going to test this 2680 level as a assist line, and hopefully to see some demand coming in at this level. If there is any rally before it comes to 2680, I would think that the resistance would be at the 2762 level, and that might probably give us a very good position to go short, and to see STI coming back into the axis line for a test. And I will hope that demand will come in at this level here. So on the overall structure, STI is still weak, and there is no case for a long position. There's more case for a short position, so that we will have to bear in mind about STI. And that is my take for STI for this coming week, and I will talk to you next week. Have a good trading week, and be careful out there.